Hello guys, today we're going to talk about Asian Paints. Asian Paints has been a stock favorite for a lot of fund managers for many years. So I thought, why don't we delve deep into how did this company actually work? This company was started by four friends in 1942 and has become the preferred provider for paints not only in India, but actually in Asia, and the ninth largest paint company globally. I mean, salute, it's come right out of India. It's pretty cool. Guys, a lot of you are watching the videos that we make and not subscribing. So can you please do me a favor, hit the subscribe button, hit the bell icon, and then comment, yes, I've subscribed. This will really make our day because we're working really hard to make these videos work. So before we get into the financials, I think we should first understand the business segments that Asian Paints actually operates in, and then we can get into why it's a leader, etc., etc. So the first business segment is its decorative coatings. Now, this is the mammoth part of their business. It contributes 18,000 crores a year in revenue, and that's about 83.9% of where it gets most its revenue from. This is basically revenue from coatings on interior walls, exterior walls, wood finishing, metal finishing, even things like waterproofing wallpapers and painting tools and implements, all called decorative coatings. The second segment is the industrial coating segment. This is about 2.3% of the revenue, or 500 crores. I mean, you know, companies doing well when 2% is equal to 500 crores. The industrial coating business is a 50-50% joint venture with this company called PPG Inc., which is actually a global leader in coatings. And they offer the entire spectrum of coatings, right from automotive coatings, refurnishes, protective coatings, floor coatings, and even powder coatings over metals and other things. Then is their home improvement business, which is as large as the industrial business. So it's about 507 crores a year, representing about 2.3% of the group of the total revenue. So the home improvement business has things like kitchen and wardrobe services, bath fittings, and sanitary ware. Did you even know that apart from paint, Asian Paints is also in the sanitary ware business? Now, although this represents only 2% of revenue, one management call that we heard is where the management said that they want to focus a lot on this segment. So you as an investor should actually think, if Asian Paints is actually able to grow its sanitary ware business, how far can they take it over the next few years or even over the next decade? So this could be one driver of growth in the future. The problem is, relative to its entire business, it's still very small. But does it have the potential to grow? And then finally, since it's called Asian Paints, it's obviously apart from India as well. Let's come to the international operations. The international operations is about 2,490 crores and is 11% of the total group operations. They actually have 7 internationally recognized brands like these, operating in 14 countries with 26 manufacturing plants all over the world, servicing 60 countries. That's pretty amazing. It's important to understand why Asian Paints is a leader. Investors also call these moats in a business. So we have a few here that I'm going to share. The first one is the constant aggressive move to reduce material costs. Their R&D teams continuously find alternate suppliers for raw materials. Even if they get a smaller discount, they will actually go and reduce their input costs. After the focus on reducing cost on the input, then comes the operational cost. So within operation, you'll have everything from things like traveling, rent expenses, fuel, power costs, etc. There are dedicated teams just figuring out the cost of operations and how it can be reduced with efficiency. Now, after their focus on operation comes the distribution part. So Asian Paints will actually give their product to distributors, shopkeepers, etc., and give this mal to them in credit. Means they don't actually collect the money from the vendor. Instead of focusing on collecting the money here, they will try to create demand in certain areas so that they are perceived as leaders, and I think they are. And because the demand is so high, the vendors are able to sell that product faster, thereby paying back Asian Paints faster. So the cycle over here is always again optimized. They also have an optimization process where they pick up raw materials to create the product. They will take this on credit, and managing this cycle of credit and debt is where their operational finesse lies. They're able to run with amazing operational optimization. In physical product businesses, a lot of the money is tied up in inventory which is not being sold. So what Asian Paints tries to focus on is try to offer schemes and offers across their network so they can free up the things which are not being sold, so they can free up cash to be reinvested in the business again. So all these things we just explained, what has it resulted in? It's resulted in free cash flow, and you can see it in this chart. The free cash flow has steadily increased from 2016 to 21, and 2021 was pretty decent. So what makes them unique? Actually, a bunch of things. The first is that they actually have smart factories with total automation and standardization. So this is something that you'll see in a lot of advanced leaders who have factories, that everything is automated. This reduces chance of human error, and the output is also a lot faster. Their focus on research is also super high. There are 200 researchers researching to create new products. In fact, Asian Paints has more than 70 patents till now. Actually, I would always think, what would a paint company have research for? But if you think about it, all these products they've built, it's happened because of their focus on the future. Then there is their entire focus on automation and technology. They'd use artificial intelligence and robots to actually process the entire end-to-end cycle of the manufacturing of the product. Like I said before, this just makes the entire thing faster, more predictable, and efficient. Now let's come to the interesting part, the financials. So first we'll talk about sales and margin. If you see, the sales are continuously improving and the margins are also improving. We know why this is happening, because they were focusing on operations, input costs, etc. And that can be seen in the financials quite consistently over many years. Obviously, this means that their net profit is also improving. But my most favorite metric is the ROCE and the ROE, both of which are much above the 20% number. They're at 35% and 27.3%. And finally is the debt to equity, which is 0.02. As you already know, anything below 1 is considered good. This debt to equity is almost non-existent. It's 0. Now, one word of advice. Whenever people watch these videos, they feel that this is a great company, I'll go buy it. But the truth is, if you buy a good company, you could and might lose money in the short term. You are not supposed to buy a single company. What you're supposed to do is find a set of companies and create a portfolio. There is this course we have on LearnApp called the Triple P Investment Strategy. What this actually does is have a set of rules you can follow to analyze a business, to analyze moats, to analyze the management, a few parameters on financials, and create a list of 15 to 20 companies you can manage on your own. So when there is a bear market or a bull market, you're able to diversify and create a portfolio for the long term. So remember, don't go ahead and buy a single company or 2 companies. That just won't cut it. You need to have an investing strategy. Check this one out. We'll leave a link in the description. The first video is absolutely free. The quarterly results just released very recently. So here are some notes for your analysis. The first thing is that sales were up 91% compared to last quarter. This is considered to be crazy good. The second thing is that April was good, but eventually the second wave actually impacted the sales. And this is normal, which means that May was actually poor, but June showed some recovery. And that is a good thing. As long as there's some recovery happening in a business, that means that the management was able to do some navigation in a crisis. One challenge that Asian Paints is facing is that inflation in India has reached double digits, which means that the inflationary pressure is actually affecting their gross margin, which is reducing a little bit. So it remains to be seen if gross margin continues to fall or they're able to find a way to navigate this as well. But you'll also see that the company, in response to this, has increased its own prices for the product by 3%. An interesting new R&D thing that they're doing is that they're expanding the Beautiful Home Store. It's basically a one-stop solution to home decor. There are currently 18 Beautiful Home Stores and another 15 in the pipeline. If you look at the shareholding pattern, you'll see 2 interesting things here. The first is that the company is decreasing the promoter pledge. This is usually seen as a positive thing. And FIIs have continuously improved their stake in the business from 15% in this period to 21% in 2020. And finally, let's do the peer comparison. That means comparing Asian Paints to its peer group. It is the market leader in terms of market capitalization. The PE is actually lower than Berger Paints, I can see here, but actually higher than Nerolac, which puts it in the mid-range from the top three. The ROE, however, which is the return on equity, is the highest amongst all the peers. Again, this is a really good thing. It shows that the business is able to return money to shareholders. Also, the net profit and the net sales is the highest among peers. Just remember one thing, these are all nice things, but the leader always has to find a way to exponentially grow. And because it's the leader and it is the market, it becomes very difficult, which is why you see they're trying to do R&D to actually push the envelope. So this is always a challenge that really large businesses face. So what are its future prospects? The first is that it's trying to diversify just beyond paints. And we talked about that, right? We talked about their sanitary ware business. Then they're extremely aggressive in adapting new technologies to provide the best customer experience. There's also the capacity expansion to setting up of new plants. So they also assume that demand will improve in the future and they'll be able to meet that demand. So they're investing in new plants and machinery. And finally, which I think is pretty unique, is that they're trying to reduce the carbon footprint of the company itself by following the ESG norms. And that means a lot of investors like companies who have a high ESG score. For example, out of total consumption of power, 57.2% is renewable energy. And I'm pretty sure if the management is focused on this, the renewable energy consumption will only increase. I hope you enjoyed this video and you found the analysis useful. Do me a favor and visit learnapp.com. We have a lot of courses there and I'm sure it'll really help you create wealth over the long term. And if you like this video, check out these two videos we've also made. I'm sure you will like it. See you in the next video.